Retirees are in massive panic mode, and I don't blame them. I mean, hell, traditional 401ks are going to be worth a lot less soon, so guess you better liquidate them now. Kind of a bad joke because it's not funny what's going on, but there are ways to not only not lose your ass when the ball is dropped, but to possibly 5x or more your 401k. We'll get to that in just a little bit, but I want to talk about what's going on with the liquidation of the 401ks. And I'm not really sure why this has come as a surprise to anyone that people are dipping into their retirement savings at record levels. The writing has been on the wall for quite some time now. And it's not just 401ks being dipped into, it's also credit cards. Credit card debt just hit $1 trillion in the US a couple months ago for the first time ever. And if you don't believe the news headlines of people dipping into retirement savings at record levels, just take a look at this data from the Fed themselves. So this is the official data from the Federal Reserve. What we're looking at is percent change from a year ago for retirement asset levels. What we see is people dipping into their retirement assets at levels faster than we have ever seen before. People dipped into them at a pretty high level before the 2008 crash, but the rate today is even faster. And by the way, what do you notice every time we see at least a decent drop on this chart? Recessions, right? Those gray lines are recessions. We are very likely to enter a recession again, if not worse. So in case you don't believe the news, I don't blame you. There is the cold hard data on how people are dipping into the retirement savings at record levels straight from the Fed. So why is this happening? Why are people struggling with money at record levels? Well, the root of the problem is our national debt and the endless money printing, which of course started getting out of control when we left the gold standard in 1971. As you can see with this chart of the history of our national debt, we were doing quite fine until about 1971 when we left the gold standard. Since then, it gets more and more out of control each year. But I don't want to turn this into like a history or an explanation of how our national debt and endless spending is destroying our economy. We have other videos on that, so make sure you subscribe. But I do want you to understand how this is one of the root causes of what's happening. And let me tell you a little secret. It's going to get worse. So in the last 4 years, we have accumulated $8 trillion in debt. Our national debt over about the last 240-year period is $34 trillion. That means we accumulated a quarter of our national debt in the last 4 years alone. This causes more inflation, and inflation is much worse than they make it seem. They have changed the way they calculate inflation over the years, of course, and then they just lie in general. So this would be the equivalent to my wife going out shopping, right? I ask her, I say, baby, how much did you spend? And she says,
Not much at all, baby. I just spent like $200 at the grocery store. I went to Walmart, got the kids some jackets. That was like $100.
So I'm thinking, awesome, $300, not bad, for my wife at least. Well, I go check our bank account, and she was right. She spent the $300 on groceries and jackets, but she also spent an additional $1,000 on holiday decorations. Yes, holiday decorations. By the way, if you can't tell, this is a true story. So I say, baby, you told me you spent $300. You spent $1,300. Why didn't you tell me about the $1,000 you spent at Michael's? You want to know what her answer was to me? She says, oh, well, I put that on the credit card, so technically we didn't spend that money yet. Really? This is the equivalent to what our country is doing with the national debt, but similar things that are being done with inflation. Again, do me a favor, subscribe. I need more people to vent to about my wife's horrible spending habits so I can keep my sanity. Help me out. So here's a list of some of the increases since 2020. We got groceries that are up 25%, restaurant food is up 24%, major appliances 12%, car insurance 33%, curtains 20%, natural gas 29%, electricity 25%, rent 20%, water and sewage 16%. Everything is skyrocketing and wages are softening and in some cases even decreasing. And you noticed what the biggest increases are above that I just listed? The essentials for a lot of people. Rent, electricity, natural gas, car insurance, and groceries, all up a minimum of 20%. It should be blatantly obvious. With credit card debt at record levels and people dipping into retirement assets at record levels, this tells us one thing. People can't afford things. Unfortunately, this means the quality of living is about to go down for a lot of people. You see, the ball hasn't dropped yet. Most of that debt is currently just debt. But when the delinquencies start, and it will, that's when the economy starts diving. And it's coming very soon. There are millions of Americans right now nearing retirement age with zero savings. You know, earlier I joking how people are kind of liquidating their 401ks, and well, at least they're liquidating when they're actually worth something. The reason I said this is because the stock market bubble is about to burst. Your traditional 401ks are going to lose a boatload of money, just like in 2008. You see, all this money printing we've been doing has artificially inflated the stock market, but that run is over. Do you see the run stocks have gone on over the last 15 years? I mean, holy smokes, that is a nice bull run. You're looking at a price down around $750 in 2009, all the way up to about $4,800 in 2021. My tag economy people, take your money and run. I'm just imagining the Roadrunner. You guys remember that from the old cartoon? This is the trick in successful investing. You take your money out at or near the top of a sector that is in the top of the cycle, and you put it into its counterpart that is at the bottom of the cycle. So where are you going to put your money? The bond market is bursting with 30-year treasuries down about 53%. The real estate market is in a huge bubble. See one of my recent videos that I just covered that with. So no thank you there. Everything that is going on is lining up for an explosion in precious metals, or these right here. And if you're a subscriber, you know why precious metals are so valuable. We cover this all the time. Tons of intrinsic value, but also the rare ability to act as real money and stabilize economies like nothing else can. Tried and tested for thousands of years. I get that people get comfortable with the traditional 401k. Your financial advisor tells you, just stay in the stock market. Of course they tell you that. The stock market has you comfortable because it's been doing so well for the last 15 years. And that is the kryptonite for unsuccessful investors. They get comfortable in one area and they stay there even through the downturns. And that's the big part. When you really could be getting money out near the top, rolling it into areas where all signs are pointing to an explosion, and keep that process going. Currently, I'm rolling larger portions of my traditional 401k into precious metals, and it's already paying off. Gold just passed $2,000 an ounce. But again, that run is just starting. And guess what I'm going to do after the stock market crashes and precious metals run way up? I'm going to roll my 401k back into the stock market out of precious metals. Duh. And I got a link below in the description for the company I actually use for my own gold IRA rollovers. They offer a 100% free kit that does a fantastic job of educating you. And I highly recommend you, at the very least, get that free kit and get educated. And even if you don't want to use that company, that's fine. Just find your own company and educate yourself on this process. Do not leave yourself out to dry, where you watch your 401k dwindle down all the way down to half or less than what it is now, only to take 10 to 20 years to climb back to where it was. Everyone thinks stocks are this magic bullet that always make money. No, they only think this because it's been doing well for the last 15 years or so. That's what's fresh in their mind. If we take a look back at this graph, what did stocks do from 2000 to 2013? Absolutely nothing. If you bought in 2000, your stocks would have been worth about the same amount in 2013. Factor in inflation, you pretty much lost your ass. Horrible investment during that time period. Look, get the kit below for free and get educated before it's too late. Or at least find a company on your own if you don't want to use the company I use. Totally fine. Roll over a portion of your 401k to help protect yourself. Kick some ass, take some names, and then roll that back once you've made a bunch of money and stocks are down. Subscribe and Tim and I will help you determine when those times are.